What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 18th of 2018. Well, folks, I hope you all are having a wonderful day wherever you are, and today we've got a variety of different things to discuss in regards to crypto and traditional markets. For crypto markets, we're not only going to be spending some time to talk about the recent positive price action that we have seen in Bitcoin and therefore altcoins and what I'm making of it at the moment, but along with that as well, talking about a really big issue that is still going to linger in the cryptocurrency space, even if we start to get a little bit of a rebound in price, and it has to do with Ethereum and ICOs. And last but not least as well, we're going to be talking about traditional markets and talk about the recent stock sell-off, as well as some price levels as to what I'm watching and how I'm going to be reacting in regards to the current trend of the downturn that we've seen in equities. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the update. Alrighty, so let's go ahead and spend some time not only to take a look at current market valuations, but also on the price changes in cryptocurrency markets. And thank the Lord above, thank you Lord Satoshi, we have finally started to see some green price action in cryptocurrency markets. And it does feel good to see this. Over the past 24 hours, not only is Bitcoin up nearly 3%, but along with that, we can see across the board altcoins are definitely following, with a few in the red here, but the vast majority being in the green. And this also goes for the 7-day chart. I'd say it's about 2/3 currently in the green, whereas we still have about 1/3 of cryptos that are down. And this is actually quite positive to see, especially with the continued bear market that Bitcoin has been in. To see some of these altcoins, being up 20-30%, it is really nice to see. That being realized, though, I do have to play devil's advocate and actually still be fair with you guys. Is this a sign that we're in a clear reversal yet? And I'm going to say not yet, and there's a reason for this. There's really three reasons. A lot of these altcoins being up 20 or 30% is really not that much considering how much many of them have declined. But we do want to keep in mind, again, if this does continue, that we might be picking up a longer-term trend. Again, nothing is confirmed to me that we're at a bottom yet. Not to mention, if we take a look across some of these players, excluding clear plays like this, for example, like EOS, that are some of the larger plays, a lot of these either A, have a smaller market cap than we would probably hope would be in the top 100 and trending towards the top, and B, volume at the moment is quite void in a lot of these players. You have some of these players, again, who are trading anywhere between a few $100,000 to $1 or $2 million in volume. And the reason why I talk about the importance of pointing that out is because at the moment, we have to understand, A, a lot of volume in crypto markets is already fake, and B, you really need real growth in organic volume in order to kind of not only confirm a bottom, but also to build a long-term uptrend that actually gets real investors excited and where we can actually start to see real price action. And a lot of these players, again, mix in Bitcoin private. We can see Digitex futures here. Dentacoin. Geez, why is Dentacoin still here? Anyways, I think that proves the irrationality of cryptocurrency markets at the moment when Dentacoin is the 80th largest cryptocurrency. It shows that you really can leave a perspective that something is valued at something that it is not worth. Okay, so anyways, I'm gonna go ramble on about that. I should probably stop, but going on though to the important stuff. Next up, we can see here that we were able to hold at a very key even level of $100 billion, and because we've had such a correction in crypto markets, it doesn't take much to have a 10% move in overall valuations. So this is really nice to see. Again, not just including the past 24 hours of price action, but really over the past 48 hours, this is where we've seen the majority of gains come back in, and it's put us back to a level where we can possibly maybe even see a higher continuation, not only in Bitcoin, but also in altcoins. And we'll get to that in just a moment in regards to Bitcoin's price. Going on to market cap dominance, though, I gotta say, we did not reach the previous peak that we saw relative in this recent run-up back in September. So this is interesting. It's a very similar pattern to what we've seen both times before we enter into an altcoin cycle. Now, am I eager on that just yet? No, there's something I'm watching at the moment, and it is looking like we might potentially get a short-term relief rally, but we're going to talk about really the key technical sign that I'm currently watching. So what is that? Well, without doing any crazy TA, and again, you guys should not just take this at face value, take it as something to take into account for your overall trading and make the decision for yourself. We were currently holding this resistance line on Bitcoin's price since all the way back here in the latter of November. And this has been weighing down price all through, again, the end of November and probably continuing on throughout December. And now we're halfway through the month here. It's almost been a month since that resistance line has started to form. And for the first time on Coinbase, not just on Bitfinex and exchanges that are trading at a premium, on Coinbase, we actually got not only steady volume, but we've been able to hold here as support on the line of resistance. Now, you all know I don't overcomplicate things. I love support and resistance plays. I love naked trading. I'm not actually naked right now, don't worry. But outside of that, when it comes to naked trading, it is one of my favorite strategies in not only crypto markets, but pretty much any market. You don't need to overcomplicate things with a lot of indicators. That's why you see me using like moving averages and really just using lines of support and resistance. It's a very awesome way to trade. It's very stress-free. Not to mention, you really get towards what major traders really care about. And this is really the question here. It's about support and resistance. If we can continue to hold this, which I really like seeing, we've already had 2 tests here. Not to mention, as this has started to flag here, and as the price has started to pull back a little bit, volume is not matching to the buy side, which is really good. That means that people aren't selling all their gains in this case. So as we start to see the candles build up here on the chart, if we start to test back up and close on the hourly above 3,600, this is not only a level of resistance that came into play over here, but if we can break past that, I think it's going to spell a lot of confidence for markets and really breaking away from this pattern of this downtrend line that's been weighing us back all the way throughout November and December. Now, if we take a look to the daily here, the moving averages are playing catch up. And what I believe is very likely to happen in this case is that we're going to get a relief rally in this case, potentially up to the 50-day. Now, the 50-day is moving downward, and prices got a ways to go until we're going to probably reach the 50-day. So this doesn't mean we're going to go up to $4,700. This probably means we'll go up to $4,500, $4,400, $4,300, somewhere in this range, possibly testing previous levels of resistance that we've seen in Bitcoin's price. This is something that tends to happen when Bitcoin gets near bottoming, or at least has a temporary bottom. You can go back and look at some of the historical price action in 2013 and 2014, or excuse me, more 2014, 2015. And you can find that it's tended that when Bitcoin has these very sharp corrections, it tends to have a really nice strong relief rally testing back towards the 50-day, which in some cases can be a 30%, 50%, or even 100% run up. But in this case, again, would probably be around a nice 33% run up to see in Bitcoin. I'd like to see it. It would be awesome. I know it would be a nice relief for a lot of people in the crypto markets who have been feeling a lot of pain holding long term. But again, we'll have to see if it happens. It does look like the price action is building up here. It's good to see that the market is finally showing a little bit of signs of positive price action. But definitely want to see continued volume across the board. That's really the thing that's lackluster here. Going on though, I want to spend some time to talk about a key issue that I think is something I've not only been fearing over for a very, very long period of time, ever since I really learned about the concept of ICOs and how they operate, but is something that I think is finally becoming apparent to not only these ICOs themselves, but the broader cryptocurrency space. And this has to do with Ether, and has to do with the way in which ICOs raise Ether to fund their ambitions. Now, back about a year ago, when I was really starting to kind of see what was going on in the ICO space, I'd say probably a little more than a year ago, but probably back when I was starting my channel about a year and a half ago, I really started to find a fascination in the ICO trend. And the thing that I came to realize was that a lot of these ICOs were raising their capital under this digital asset, or whatever you want to call Ether classified as. And this digital asset was continuously increasing because there was a demand for it. People were buying it at the time. Crypto was trending. And a lot of projects saw it as an awesome vehicle, not only because A, it was easy to do an ICO at the time. There was a lot of projects thinking they could just walk right ahead without any regulatory compliance, but also people were willingly tossing money that was growing itself. Ether as an asset was growing at its value. So if you were to raise, say, 10 million or 20 million in ICO, maybe even 40 million, next week or a week or two down the line, oh, you've got 80 million in funding now. You already got 120 million in funding. And probably during December, everyone thought that they'd have $1 billion war chest that they could use to, fund their ambitions. And this went on for a very long time, all throughout the bull market back in 2017. And the thing that I always wondered was, what happens when it stops rising? And I thought, for example, I was like, well, maybe it's not an issue. Maybe these ICOs for example, over OTC or some kind of large trading desk, they swap it and they cash out, to keep their funds in a safe, stable currency. Now, I'm not saying the dollar is perfectly stable in that case, but you get what I mean. It's one of the ways in which you won't be having your your war chest of funds going up and down every single day. And I learned that a lot of these ICOs haven't cashed out their ETH. And we're now seeing what I would say is almost a run on the bank, or the equivalent in this case for crypto, or basically a lot of these projects are worrying about two things. A, that their Ethereum that they raised is now going to start becoming worth less than what they initially raised, meaning, like, let's say, for example, you raised $10 million when ETH was $100, and ETH starts to go to $80. You're now lost 20% of your ability to fund your project in that case, or at least 20% of your funds or your purchasing power. And along with that as well, they're worried about the compliance issues. What if they have to return back that ETH? What if they were actually a security when they didn't think they were? And what if they want to take the right proper steps and not have to face jail time or penalties and actually work with the SEC? Well, they're going to need to be able to return as much money as possible. And when you have ETH dropping as fast as it was over the past few weeks, and really over the past month or two, that got a lot of investors, or more ICOs in this case, worried. So going on here, we can see that there's actually a lot of outflows out of ICO wallets. There was a big spike here in November when I think a lot of the pandemonium was really hitting into crypto, and then also back here over the past few weeks in December. And we can see a nice wider chart here as well, going from October. Again, really ramping up here as we started to see the break on 6K for Bitcoin in this case. But we can start to see here that Singular DTV was the biggest one here. At the time, they'd only raised 7.71 million. And what's actually interesting is they're probably the most comfortable out of all projects. They raised in like the fall of 2016. As you can see, they only raised 7.7 million. I mean, only 7.7 million. But for ICOs, that was, for the time, that was it was pretty big. But, it was much earlier than other projects. However, though, you can see here that they've started to cash out a decent amount of their ETH. They still have a huge war chest here, 165,000 ETH. But if we take a look over projects like Oregon, Kyber Network, Friends, Singularity Network, Go Network, a lot of these other ones here, a majority of these raised back, for example, like Oregon and Kyber, they raised back in either the fall or the summer of the early part of 2017, probably around the spring or summer, and some of them raised in the fall. So we can go here, for example, Kyber. Raised in September. This is one of the big ICOs in the fall that went around. I had a few friends who invested in it. And you can see here very clearly that it has gone below ETH's price here. Not to mention, ETH at the time from when they raised was worth much more. Okay. If you go to Oregon here, for example, Oregon's token itself, down 0.5% to ETH. And not to mention, when they did this ICO, it was 15th of May. They're just barely at the level it was in May. Okay, so basically what the trend that you find with these ICOs, you have a few here, for example, like Status that did their ICO in, again, same time period where they don't care so much. I would say, I'm pointing out a little bit about the token price in this case. They don't really care so much about the token in this case because they didn't put any financial stake into that token. The investors did. What they have to worry about is making sure that the original ETH that they got, however much they have now, that dollar value is enough to pay back investors if they have to, meet compliant with the SEC, that they have to refinance investors. And if they can't, that is going to be a very, very big issue for a lot of these projects. Now, Singularity, again, in this case, probably very well protected, maybe just cashing out some, hedging against the concept that ETH might drop much lower, but I'm just saying, if ETH remains this low for a while, it's definitely going to set back a lot of these projects. And it's a big flaw with ICOs. So we need to start thinking about a better model. I think, with STOs, for example, I think that's a great first step. And people, for example, potentially instead of with Ether using things like stable coins, I just think that's a much better method of investing. And I just don't see, for example, if this was such a great model, VCs overnight would be basically, saying, oh, screw raising with dollars, let's just all raise with ETH. A few did, A few did as they went into the ICO space, but really, I think most VCs would laugh if you asked them to do that, or if they were, if anyone said, "Oh, I'll pay ETH for ownership of a company" or something like that. It just doesn't make sense. Anyways, I rambled on enough. Just wanted to talk about this. I think it's something important to think about, and one of the big setbacks for a lot of these ERC20 tokens that I think a lot of people didn't see, but just an important thing to share, I thought. Going on here, let's go ahead and talk about the current status of equities and predominantly the U.S. stock market. Now, I recently did a video talking about, are we repeating 2008? This is what we talked about in our last daily update. And I talked about how across the board, we're not in 2008, in my opinion. We're more in 1994. It was a nice Bloomberg piece that we actually talked about. But more than anything, what I really want to focus in on at the moment is equities. We really talked about the housing market then. If we go through here, guys, we've been seeing equities continue to slide, and PE ratios are actually starting to get down to a range where I feel there's a little bit of, in some place in this case, a lot of people, for example, are watching Apple, Facebook, Amazon. They still have a ways to go. But after we get a flush in some of those larger players, there's actually a lot of really fundamental plays that are quite cheap, actually, surprisingly. Even in the tech sector here, for example, the S&P 500 Information Technology Index, forward PE is 15. That's really not that much, actually, for the tech sector. It's good to see that, again, we're dropping down to a little bit more reasonable price ranges. But still, definitely high up there comparative to where it was back, say, in 2010, 2011. The big things I want to talk about, though, some of the charts here from that article. And, Bloomberg has some really good data points here. You can see, for example, we had the worst December since 1931. Now, I don't want to stir up pandemonium here in regards to the change here. The big reason why this is not that concerning to me personally is because even though this is on a measure of percentage, I mean, the thing is, it's a way to kind of spin a narrative, in my opinion. I think I like sharing these data points with you guys. It's something to consider. It is interesting to see that we didn't get a Santa Claus or Christmas rally in this case, a relief rally. A lot of people were expecting that. I think bulls were hoping that that would be the next thing that we see after, what we'd already seen in November in previous months. However, we have definitely not gotten that. And I think it speaks that we are going into a bear market in 2019. Again, I've been on edge in 2018. I've been a little bit bearish. And I think we're finally starting to get to that point where equities are going to start to feel some serious pain, and people are going to have to come to the conclusion that we need to come back to more substantial levels in the long term. But again, this isn't pandemonium just because we found that there's 1 month where it was bloody enough to compare back to the crash in the 1930s. I don't think that's proper to do that. I don't think that does proper justice by analyzing markets. But nonetheless, an interesting data point to keep in mind. The bigger thing that I'm concerned about is something that matches more really in the past, not only past few months back in the early part of 2018, but also in 2016, which was the amount of volume from sellers versus buyers, or generally what's known as down and up volume among stocks. So in this case, again, we're starting to see much heavier sell side action. If you watch things like I've mentioned before, like the Smart Money Flow Index, you can see, for example, that smart money usually moves at the beginning and at the end of the market, and we're seeing that money is outflowing during those periods. And you can start to see price action starts to really domino downward in these time periods, and you have some trading during the day where the algos trade, and then the real capital outflows, probably usually conducted by humans or algorithms as well, start to outflow during the beginning and the end of the market. And that's not a good sign. So the more you have of these indicators starting to signal that larger players are getting out of the market, that's what I'm concerned about. Going on here, though, taking a look over here at equities, the one thing I'd say that you want to watch, guys, there's not too much to complicate here as I talk about. I like to do naked trading in this case. The thing to keep an eye on here is to see if we break past this line of support. This is the previous price level we saw back during the low here in February of 2018. If the NASDAQ breaks below this level and really breaks out of this descending line of support, this lowering line of support here, if you break below that and you break below 6,600 here, I think you're very well going to be seeing a similar flash crash to 2015. And this high up in the market, that kind of percentage drop with an already decent decline is going to take us back down probably somewhere to levels that we haven't seen back in early 2017 and potentially even into 2016 and 2015. I honestly think that that could happen, and the reason why I can say that with pretty sheer confidence is because Amazon is holding on a thread. Amazon has a big gap here it needs to fill. Not to mention, it'd be great to see this having a 50% retracement. It's got another 500 points to go. 33% decline. Going to Facebook. Facebook getting resisted at the 50-day here. Looks like it not only needs to still test its lows, but possibly come down to one of these bottoms down here around $100 or $120, somewhere in this range, again, pulling something close to a 50% correction. We still haven't seen it yet. Apple, for example. Apple has definitely started to pick up on its decline, definitely taking a hit across the board in the market, but I think you need to see it probably come down to a much more substantial level of support, maybe down here at 130, or to a level, for example, that would deem around a 50% correction, $115 in this case. Again, somewhere in this range where we can start to actually finding some clear value in the market. And Google, another big tech play, still holding very well comparative to some of the other FANG stocks, and I think we need to see this come down again to a substantial level of previous resistance, making it support, again, having a nice correction. I don't think you're going to see it all the way down to $600 in this case. I just don't see that happening really for Google, but again, having something like a 40% correction, something that's actually deemed as, not so much, I would say it's pretty close to recession territory, and I don't think it's going to be extremely sharp. As I've mentioned, this is where I'm quite neutral. I don't think this is going to be like 2008 where the dominoes fall just like that and it happens in 3 or 5 days. No, I just don't see it right now. There's not enough excessive leverage in the market in that case, but monetary policy is changing. And because of that, the tone changes in equity markets. So I know there's the Fed meeting, I think, later today where we'll really get to determine whether or not the Fed is going to raise rates here in December. The uncertainty of a rate hike is actually starting to become quite apparent in a month that we all thought was clearly going to be a rate hike. With the markets down as much as they are, Fed might decide not to. I've got to be clear in my belief that I think the Fed is going to raise in December. I think it's a little bit of hopium that people are living off of in the equity space. And over the next few months, though, we'll have to ask whether or not the Fed will be able to raise rates. And I'll be honest, I don't think that Powell will be able to go through and really doing it much higher, but prediction models are still showing that another rate hike or two is planned for 2019, and that might be subject to change over time. But it's a long ways away, something we really don't have to think about right at the moment, and we will definitely keep up with it over time as it becomes more relevant. Anyways, I rambled on enough today, guys. I hope you all are having a fantastic day wherever you are. If you guys have anything that I missed in the video or something that you would like to add or maybe share an opinion on, please leave it down in the comments down below. As always, love to hear from you guys and get discussions going here on the channel. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay soon. See you soon.